talk about Tesla versus Rivian, and what's the difference between those two companies. But you can almost take it to what Tesla is in comparison to the rest of the EV industry. I found this article this morning. While I bring it up, it is going to be over here. And what's funny to me, right, was I saw this article on Yahoo Finance, right? And we come up with our stream ideas a week ahead of time, guys. So, and Vanessa, I'm like, I got to figure out this guy's thing. We come up with these ideas ahead of time, and we talk about, what we want to talk about. And this article came out on Sunday talking about Apple buying Rivian, Nissan with Fisker, Tesla rivals woke, sparked speculation as EV growth slows, right? And so the EV market as a whole has been suffering from a lot of turmoil in terms of profitability, because they have to. Most of these EV companies they don't manufacture most of their own parts; they're outsourcing, and these things aren't like tooled right to make electric vehicles on the whole. And plus the batteries are expensive, and there's just a lot of stuff there. But it was just a kind of a thought that maybe Apple should look at buying something like Rivian. I wouldn't. But he was suggesting, based off the fact that Apple needs to break into some sort of new market to continue to be a growth company, there could be the possibility in Gene Munster's eyes that that could be a worthwhile thought for somebody. But very interestingly, I appreciate it. Now now you're tracking. But one of the things that Musk said to Rivian said they need to cut costs massively, and the executive team needs to live in the factory or they will die. And that was basically the biggest takeaway that I understood of that, is that Tesla, more specifically Elon, was somebody that would live on the factory floor, that would personally ensure that his vision, right, for what the company should be doing was being acted on. And you have a lot of executives in various organizations, regardless of the size, that sit there and they talk about like, well, yes, this is what I want to do. This is what this company is going to do. But they're not the ones personally going down there and ensuring that happens. It's like, well, I've got subordinates to have subordinates to have subordinates. But at the end of the day, when you're the one that has to answer the mail, right, you got to answer the bell to what's happening within your company. Like that doesn't cut it, and so we'll go ahead and get into this now, just to kind of highlight some things. And I did my arts and crafts as I usually do. Tesla versus Rivian. Look at that little stock spotlight for you guys on a wonderful Monday morning, taking a break from executing the trades, because I really, really wanted to talk about this and talk about what is the difference between these two companies. But again, it could be a microcosm to what is Tesla compared to all American EV makers. Rivian just happens to be, as far as what it actually is, the better in the best position, albeit a terrible position. So, Tesla's been around since 2003. Obviously, it's got its vehicles, it's got energy generation and storage services, and it has a big services business, right? Total gross margins in the last quarter across all lines, and this is after they've kind of reduced prices and gone into this price war model, is still 17.9%. So even after major investments into all these gigafactories and everything else that they're doing with expansion, they're still making money off their vehicles and their generation and their services. So 18% margin on that. Most of the recent growth is in the energy sector. The cool thing with Tesla is, if you're paying attention, is that, or if you have been paying attention to what Tesla's been doing, is that a lot of the large U.S. manufacturers have adopted domestic charging standard, right? And so, like, if you would have bought Tesla at the IPO, even with they offered it at $17, Tesla's split adjusted IPO price is $1.13 per share, which means had you bought Tesla at $17 a share, the splits would have led you to basically your cost basis would be $1.13, and if you'd have held it this whole time. So the split adjusted high was at around $414.50. So that's the split adjusted high, because we remember that Tesla used to trade, almost at $1,000, and the lows at its IPO. One of the most successful IPOs in history in terms of like holding your IPO price and running up from there. So what's the opportunity in Tesla is it's got its viability in the EV space to make EVs profitability, right? Because they've been around and they've got their own stuff going on. This ability places Tesla far and above all other EV makers on the market. And then the other thing too is that they do have diversity in their business. They don't just make the cars; they have the energy storage, and they do have a lot of lines of business. And they have a little bit of that Apple model when it comes to like the whole like services side of things, right? So you take that against a company like Rivian, started in 2009. I can't even pronounce this, guys. I don't know if it's the name is Scaringe or Syringe, but regardless, it started in 2009. Here's Rivian's problem though. -4%, -46% gross margin.
-46%.
-46%. They lose $43,000 per vehicle that they sell.
Is that on average, like over the past since 2009, or is that this?
No, this is in the past quarter.
This is the past quarter.
This is the past quarter.
They lose $43,000 per
vehicle delivered.
Okay.
So obviously they had the contract with Amazon. The previous quarter was like 33% of their revenue was from that. It's down to 8%. But here's the thing. So Rivian, as far as cash raising, had a really successful IPO. They IPO'd at $79. In 2021, traded as high as $179. However, it's been in a downtrend ever since. Like I pulled up the monthly, and it was just like down into the right, and it's currently trading at or around $11. $10.50. It lost another 6% today. So what's the opportunity in Rivian? Well, you know where you're wrong, and it's at $10.05. So you could stink bid this thing, right? Just on technicals alone, looking for a bounce. And you know that if it lets go the $10 level, then this thing's just going nowhere.
Yeah.
And so when I looked at all of the things, like they're just bleeding cash so terribly. They don't make money. They haven't really done anything that's appreciable with regards to cost cutting. It's funny because Amazon's like a major shareholder in this company, as part of like the whole like Vans deal. And it's just like the niche that they've been going for was more that adventure thing, luxury adventure, if you will. Their vehicles are really expensive. So, like when you look at this and you look at the corporate structure, I'm like, man, you really got to cut the fat. Like I saw the tree and it was just like, it was almost the same size as Tesla's for a company that's not even as big, in the home office. And I'm like, yeah, that these people are just sitting there to collect paychecks until the company folds, and then they'll go off and do something else. I just don't necessarily have any faith. So the only opportunity I see in Rivian is to stink bid the $10 level, see if it holds, and get a rebound off of that. But like when you look at Rivian's share price, we were trading above $20, not more prior to the last earnings, and they reported the last quarterly earnings, and it's just none of it was good. None of it was good at all. And I did not see hopes for Rivian if they report something even half as bad over the next quarter. And then they guided less deliveries as well. So everything about the company is terrible. And really, at this point, Rivian is in somebody find me some cash infusion through whether that's a buyout. Or some other major investor that really does believe in it. But if the EV industry in America, at least, is cooling down, I find it hard for Rivian to be able to get some major catalyst or a major, angel investor, if you will. And Barry says there was so much hype for the Rivian IPO, and it shows. And it was one of the most successful IPOs in terms of cash raise in history. And since then, it's been absolutely crap. So that was kind of the highlight between Tesla and Rivian. Yes, Tesla is currently in the downtrend in price, but when you take it against since it initially opened, there is more opportunity in Tesla. I'm not necessarily saying, that like now would be the time to buy, or, like you have to look at price action and determine your own risk on that stuff. But what I will say is that Tesla will continue to exist for a very long time. And I'm not even sure if Rivian's going to be around 18 months from now.
Period, point blank. I think this is a great opportunity to ask you, my friend, what is the best possible scenario for Rivian now? Because my struggle with this is, I agree, they need cash. They need some kind of cash infusion. The question is, if anyone is willing to, in this current inflationary environment, the Fed's not interested in cutting rates. It's still very expensive to borrow money. And if you want to get a large stake in something, why would you not focus on a Tesla, a company that's already been profitable even during these difficult times? So what do you think is the best possible scenario for Rivian moving forward? Do you think foreclosure? Do you think they just hang it up? They hang the hat, they hang the cape, and they just file for bankruptcy, sell off the assets, and try to recoup what they can? Or do you think a buyout from Amazon? What do you think?
I think honestly a buyout would be better suited. They do have, obviously they got vehicles on the road, right? I have seen them on the road. I haven't seen a ton of them, but I have seen them. So obviously there's a viability factor in terms of what they're making. I think a company with the buyout though is a turnover in corporate leadership. And I don't like calling for people's jobs, if you will. I'm not going to sit there and say I could run Rivian better than you. But accompanying that, right, you have to have somebody that has a different vision, that has the roll up the sleeves mentality to actually get on the factory floor and start looking ways to streamline this stuff. So it's because if somebody comes in with a buyout, they're not, for a company like this, they're probably not going to buy it even at current prices, right? It'll probably be at a reduced amount. It does have to be a very cash heavy company that can afford to kind of like leverage these things, even in an inflationary environment. I would say somebody like an Apple is really a good candidate for it. I do believe that they are a good candidate for this.
And they have the money.
They have the money. They have some expertise. They do have, as far as like Porsche has come out, Apple's got a partnership with Porsche and Aston Martin.